Hi there, traders. This is Brad Gilbert with today's trading action. All right, now you can see in a lot of these charts, the dollar index trading sideways, sort of drifting. Euro doesn't really know where it's going. Sterling, it's got itself up off the floor, but stalling, as is the Aussie and the Kiwi. Actually, dollar CAD doing the same. Dollar yen is having a bit more of a pleasant time of it, just sort of heading north, as is dollar Swiss, right? So there's a few things going on, but this is where you connect the dots, right? We've got an easy situation today. We had really weak GDP numbers, industrial numbers out of UK last week, and it sent sterling tumbling. Today we have the employment numbers, right? This has got to be your focus, right? Because we've got some sterling instruments with direction. All we need is the penny to drop. Now, the two key components here for new traders to looking at the economic numbers, you got the unemployment rate, which is 4.3. The range is 4.1 to 4.4. And really, the other number to look at is the employment change, right? We're looking at 2K, and the range, they're quite massive, right? Minus 60K to plus 200. Now, it's really just a matter of connecting the dots, right? And what I mean by that is, if I just get off my page here, come back to the live trade hub, I've actually set up a little bit of an easier scheme for most traders to work out where the money is, right? So it's a matter of connecting the dots. So what we've got is we've got the UK employment numbers coming out. So you've got the forecast and you've got the range of the data. Now, this is really how simple it can be, right? So you sell sterling, right? If the data is on the bottom end of the range, right? So minus 60K, if it's equal to or less than that, sell sterling. At the same time, if the unemployment rate comes out greater or equal to 4.4, it's like a double whammy, right? The employment numbers have like a two-factor situation. So what we need is weaker numbers, and if we get them, you sell sterling. If we just get stronger numbers, okay, so employment change greater or equal to 200K, and the unemployment rate less than or equal to 4.1, well, you're going to be buying sterling, right? And that's just how simple it is. Now, which pairs do you trade? Well, go through your charts and work out which pairs are going up and which ones are going down. So as you can see, sterling against the dollar, it's perfectly set up for weaker numbers. That should be your go-to. When it comes to stronger numbers, well, you can actually cherry pick the best crosses because most of the sterling crosses are going up at the moment, right? And this is the problem. A lot of people just focus on the major currency pairs and they miss the gravy, right? Stronger numbers today, buy sterling across the board on the crosses. If we get weaker numbers, well, I'll be looking to sell sterling straight up, right? Sterling against the dollar. Okay, so check that out. It's pretty easy concept to understand. You combine the fundamentals with the technicals, and that's where the cash is. All right, guys, have a good one. All the best. Cheerio.